Thank you. Hi, everyone. And on behalf of everyone at JPMorgan Chase, we're excited to have the opportunity to speak to you all today. As I'm sure most of you know, JPMorgan's presence in Israel is relatively young, but we're growing rapidly. So to start, I thought I'd spend a few minutes spending some time on actually what is JPMorgan and the size and scale of our franchise, and give you a better sense of who we are and what we do. Most importantly, JPMorgan is the world's market leader in financial services. We've been around for over 200 years. We operate in over 100 global markets. We have more than 275,000 employees. Our revenue is over $100 billion, and we almost have $3 trillion in assets. If you look at the chart on the right, you can see how our revenue compares with some of the other large global banks. And importantly, we are the world's most important systemic bank. In terms of what we do, we have a number of different businesses, including wholesale, where we work with institutions, and retail, where we work with individuals. If I start on the right side under the brand JPMorgan, we have the corporate and investment bank. This is your traditional wholesale finance. This is everything from sales, trading, research, investment banking, wholesale payments, treasury services, custody and fund accounting. We also have an asset and wealth management franchise. Asset management manages the wealth of large institutions, and wealth management will manage the wealth for wealthy individuals or family offices. We have a commercial banking franchise where we will bank small to medium-sized corporates. We define that as small and medium, as corporates with revenues less than $2 billion. And of course, we have our CCB business, our traditional consumer and commercial banking franchise, everything from checkings accounts, savings accounts, credit cards, auto loans, mortgage loans, et cetera. Our two biggest businesses are what we call the corporate and investment bank and the CCB. They make up over 80% of our revenues. In terms of penetration, the CIB operates in 15 lines of business. JPMorgan is number one in 13 of those 15 lines of business. And for the two areas that we're not number one, we're in the top three. On the Chase side, much larger presence in the US, but our penetration is staggering. One of every $2 that passes through the US economy goes through Chase. We bank more than half of the US Americans in the ecosystem. But to power our bank, we invest heavily because technology drives our business. In 2018, we invested $11.4 billion in technology. That is number one in financial services, and it's actually top 5 in terms of investing in technology around the world. Fourth only to your more traditional tech players, Amazon, Alphabet, and Walmart. Where are we investing? Not coincidentally, we're investing in the same places where the Israel ecosystem is thriving. Data, analytics, AI, machine learning, cyber, blockchain, APIs. All of those areas is where most of our investment dollars are going. And in fact, last year, we signed up over 85% of the Israeli banking clients onto our blockchain network, IIN. What does that technology investment yield us? We are using that technology investment to not just become the retail bank and the brick and mortar bank, but to become the world's leading digital bank. Our digital footprint is vast. We have almost 50 million digital customers. Those customers sign on to our portals over 1 billion times every month. On those portals, we process 5 trillion payment transactions every single day. 15% of the global economy runs on JPMorgan's rails. How do we do that? 20% of our workforce are technologists. We have about 50,000 engineers actively developing, building, and implementing innovative solutions to keep us relevant for tomorrow. Those engineers have built over 6,500 applications, which run on over 185,000 services. In terms of how clients consume our digital footprint, we're investing in platforms. We have different platforms for every client segment. A couple highlights in the top right, JPMorgan Markets for our wholesale business. In the last year, we've taken dozens of fragmented applications and combined it into one seamless portal that does everything an asset manager, bank, broker-dealer, hedge fund, what corporate would want to do across the full trade lifecycle, from research to pre-trade to execution to post-trade analytics, and we are actively now investing in personalization to make every single client's experience unique and tailored to them. Another thing that we did in 2019 was we launched a new platform called UInvest. We recognize that why should we only let wealthy individuals and wealthy families invest with us? We bank half of the US. We can literally look at their checking accounts and see the money moving out of Chase into other investing brokerages. So what did we do? We launched UInvest, which makes it very simple for anybody that banks with Chase to create a new investing account and to leverage any free savings they have and put it to work. That's a lot about what we've done. Let's talk a little bit about our strategy and what are we doing and where are we investing in the forward. The first starts with where do we get our ideas from. We spend a lot of time engaging with the Israeli community and the broader fintech ecosystem. A lot of our ideas come from clients, competitors, vendors, fintechs, consultants, industry teams, and also our employees. We spend a lot of time running employee idea competitions because our employees are the ones interacting with our clients the most. If I think about our strategy, I would put it in two buckets. Half of it is on exploitation of our existing businesses, and half of it is on exploration of new businesses. On the exploitation side, we're a large, successful business, but we're not perfect, and we spend a lot of time trying to optimize our existing plan. The way that we're doing that is from the inside out. Internally, we spend a lot of time trying to automate manual workflows and inefficiencies. How do we get rid of legacy systems, pain points, processes? How do we build more seamless tools that do workflow? But most importantly, how do we capture more data at every step of the client interaction? From data capture, we can then invest and build data visualization tools, which we have, and now we're implementing predefined criteria, which is rather than relying on a human to burrow through the information, how do we get smart enough to know what information to look for and alert our salespeople and our bankers when to act, and give them automated dashboards to tell them who to call, in what order, and why. Externally, we're also trying to make it for clients to do business with JP Morgan. Right now, our scale is limited by how many touch points we can have and how many employees we can have. But as lovely as we are, not everybody wants to interact with a JP Morgan banker. So we're spending a lot of time building client self-service tools. How can they log in? How can they get research, analytics, pricing? How can they execute and do anything you want with JP Morgan without having to pick up a phone, without having to call somebody, or without having to go into a retail branch? On the exploration side, we spend most of our time not just optimizing, but transforming. Nobody knows what the future holds, but we all know the definition of financial services in 10 years from now is guaranteed to be different than the definition of financial services today. So how do we navigate that path? We're focusing on our clients. We're focusing on our clients' needs and how do we better service them. Traditionally, we service them in a current way, but when we analyze actually where clients invest and where they spend money, a percentage of it comes from banks. But our clients spend a lot of money on tools that banks don't provide them. Not because we can't, just because we don't. And so there's a lot of money that they invest from vendor solutions or they invest internally. So we spend a lot of time thinking about how do we better holistically capture the client's wallet? How do we serve holistically everything a client needs, whether we build it ourselves or whether we partner with the ecosystem? Implementing those solutions can be a challenge. It is not easy for us to innovate and do things agilely and quickly and rapidly at a firm of our size. So in the last year, we've launched 2 new programs to make it easier to get things done faster. We have a product incubation function. We now have teams of engineers whose full-time job it is to do nothing at JP Morgan other than rapidly build and prototype new products in 6 weeks or less. Their only goal and milestone is to build 10 or 12 new products a year. No politics, no bureaucracy, no funding. We'll do all the work on prioritizing the ideas and make sure that we're lining up our bullets in the right way, and then rapidly iterate them and get them into our clients' hands to get feedback. On the external side, we're not foolish enough to think that we can build everything, and we need and want to actively partner. But unfortunately, I'm sure some of you guys know, historically, it's been very difficult to partner with JP Morgan. We treat every company the same. We would go to any emerging fintech and give them the same legal paperwork that we would give to IBM. We're changing that. In the second half of the year, we're launching a new framework that we call Rapid POC. NDAs, POCs, evaluation agreements are seamless. We can have a meeting with the CEO, and we can actually have an agreement signed in a matter of hours, all digitally delivered. We are buying infrastructure environments and data sandboxes to give you guys access to the actual environment that we run in, as well as all of the data that we have access to. So we can do that in a matter of 2 weeks. Right now, I'm sure some of you know from personal experience, that process currently takes up to 9 months. So that's coming in the second half of the year, and we plan to have a lot more engagements and a lot faster and more seamless engagements. Let's go through some examples of what that's yielded us. One of the things that we incubated last year was virtual assistant. Nothing interesting or novel except for why we decided to do it. Virtual assistants are in over 50 million US households. The Amazon Alexa skill is in over 20,000 devices. A new Google Home is bought every second. As much as we're investing in desktop, mobile, and web JP Morgan platforms and applications to interact with our clients, we're not selfish enough to think that the client is going to have to come to JP Morgan. We want to meet them where they are. So in 6 weeks, we built an Alexa skill. Any one of our clients can go to the Amazon Alexa App Store, download it, use their JP Morgan credentials to log in, and at any given moment, wherever they are, they can just ask Alexa, send me JP Morgan's most recent price on Apple. Send me their research report, what is their market commentary, and all of that stuff is seamlessly. We spend a lot of time trying to figure out how do we deliver what clients want, where they want, and how they want it. And if it's not on JP Morgan's rails, that's okay. Another thing that we did last year, JP Morgan Developer Portal, developer.jpmorgan if you're institutional, or developer.chase if you're retail. We're trying to transform the bank and make it easier and faster to build stuff. We're investing heavily in what we call our core digital platform. Anything that's a common service, alerts, onboarding, entitlements, metrics, notifications. And then on top of that platform, we're building microservices and APIs to enable us to rapidly build new applications and business services in days, not weeks, not months. But it occurred to us, why do we always need to build applications and give them to our clients? What if a client doesn't want a JP Morgan application? What if they just want infrastructure to consume our services to build their own kit? So as opposed to only integrating with the front office of our clients, salespeople, traders, bankers, we said, let's start talking to the engineers at our clients. Let's give them the APIs, let's give them our infrastructure, and let's let them build their own applications with all of the great things that JP Morgan has. So we built these two sites. Both of them were done last year. We have over 1 million API calls every single day. We're giving them tools to build their own applications, and we're also giving them access to data. We sit on a wealth of data. We have more data than any financial institution in the world. Our clients are desperate to have that data and to use it to give them better analytics and insights. We have a lot of data actively leaving the bank, going to our clients through our APIs. On the exploration side, where we're building new businesses, we're also spending lots of time. One of the businesses that we're building is risk as a service. Our clients are under massive pressure, whether it's fee compression or margin compression. Our clients are looking to outsource more. We've heard a lot of feedback from clients that says, wait a minute, you guys are JP Morgan. You're the world's largest bank. You've invested hundreds of millions and billions of dollars in your infrastructure. Can I just use yours as opposed to investing in mine? So we have a risk platform. In our institutional business, we call it Athena. Why should we limit our risk system to only our own employees to provide prices to our clients? Why don't we expose it externally and give it directly to our clients and let them build on top of that stuff? It enables us to increase the distribution of something we've already invested in. It allows us to solve a client pain point. It allows clients to ease their infrastructure stack, and allows us to build new revenue streams. We are super focused on building new recurring subscription revenue streams. As I'm sure you guys here know, the EV multiples on a recurring revenue stream is significantly higher than that on a transaction revenue stream. And so value to the franchise is huge if we can do risk as a service and lots of other things like it to get recurring revenue streams. Like I said, we don't want to build everything. We are actively trying to partner more. We have deep partnerships with a number of companies in all of our business lines. Some of these include Bill.com to help merchants buy and sell goods. We leverage Roostify to help make the digital experience better to take out a mortgage and to have digital document upload and delivery. Our UInvest platform is built on the back of a partnership that we have with InvestCloud. And in our sales and trading business, we actively provide data visualization tools by a company that we've partnered with called Mosaic. In terms of how we engage fintechs, we will engage with them in all shapes and all sizes, and we have a number of programs that we put in place to take advantage of that. These programs are not restricted, and we maintain complete flexibility to customize the experience for any fintech. On the top, company creation. We will actively create brand new businesses from scratch, where we will write a business plan, we'll hire a management team, we'll find office space, and we'll incubate a new company. We'll also externalize IP to get them started. We have an in-residence program. For really early stage companies that don't yet have revenue or a proven business model, or in some cases even a product, we will partner with them through our in-residence program in exchange for warrants in the company, and we'll give them real estate, we'll give them assets, we'll give them data, we'll give them access to our people, and we will literally help them build their product from scratch. We're starting to invest a lot more in that. We will, of course, make lots of investments. We have an investment portfolio of over 150 companies, and we're starting to be more aggressive and making acquisitions. And lastly, we've also created lots of utilities and consortia for things that are market infrastructure that require the entire financial services industry to back it and be behind it. On the right side, why partner with JP Morgan? Lots of reasons. One, we've got capital, and we are actively being more aggressive in funding existing companies. Two, board seats and subject matter expertise. We are a very active investor. We are the furthest thing from passive. We will play an active role in helping you shape your company, grow it, provide business development advice, make introductions, and provide subject matter expertise for us to consume your products. If I take Symphony as an example, we didn't just invest in it, we rolled it out to 150,000 users. That provides product feedback, it provides consumption, it teaches them about scale, it teaches them about customer support. It also gives them access to the thousands of people that we have in Salesforce so that we can distribute their products to our hundreds and hundreds of thousands of clients. Lots of different reasons that you should engage JP Morgan if you're a fintech. How active are we? I won't spend too much time here, but we're pretty active. This is the examples of one line of business, but we meet with almost 1,000 companies every single year. The first thing that we do is figure out, are they connected to a business strategy, or is there a new strategy that we didn't think about before as a result of some of the innovation? We are actively working with over 360 companies as we speak, doing 110 POCs, and in 2018 brought 70 new fintech partners into production inside the firm. If you look at this list, this is just Israel. These are companies of all sizes. Some of these are your multi-billion-dollar companies like Checkpoint or SimilarWeb, and some of these are very young and nascent companies from Israel like WeMatch or Access Fintech, who were members of our in-residence program, and we helped them build their product from scratch. In fact, WeMatch actually went live last week. Very excited about that. The other thing that we've done is we announced a partnership with StatPro, actually on Monday of this week. And so as we look for things to do, again, we are trying to provide holistic client service. We are not in every business, but we want to provide our clients with access to every business. So any company that can complement our existing offering that touches the same clients that we do, we are actively soliciting partnerships there to help distribute your product through our platform and through our network. Because of the Israeli ecosystem, we believe very much in co-location, and we are actively doubling down on our presence. Last year, or 2 years ago, we had about 5 employees in Israel. Last year, we hired Yoav Intrador to run our IITC site, our Israel Innovation Tech Center. We've grown our Israel presence from a talent standpoint of talented engineers from 5 to its current of 103, and we're growing our presence to 200 in 2020. But we're not just building stuff here. We've actually moved a number of things, including our Blockchain Center of Excellence, our Data Analytics and Machine Learning Center of Excellence, and our Cyber Center of Excellence. But we are also building fintech and partnership teams to work with everyone around this table. Our Israeli fintech team is led by Ziv Gafni, who sits somewhere over here. And if those of you that don't know him, please take the time to find him at some point today. Thank you for taking the time, and we look forward to working with you.